Porsche's profits were falling. Sales in China were weakening. Battery investments were becoming harder to justify. The company's once celebrated electric ambitions were being revised. Cost reductions entered the conversation. Job cuts entered the conversation, and investors started asking uncomfortable questions. For years, Porsche had been one of the automotive industry's great success stories. Strong margins, powerful demand, one of the most valuable brands in the world. It wasn't supposed to be facing these kinds of questions. The easy explanation seemed obvious. Electric vehicles, the EV market had cooled, demand was slowing, competition was intensifying. Consumers were becoming more cautious. Case closed. Except the story wasn't that simple. Because Porsche hadn't built a bad electric vehicle. In fact, many would argue it built one of the best, and that created a mystery. If Porsche had successfully built one of the most convincing performance EVs on the market, why was Porsche suddenly under pressure? What exactly had changed? To answer that question, we have to start with a car that seemed destined to succeed, the Taycan. When Porsche unveiled the Taycan, it wasn't trying to catch up. It was trying to prove something. For years, critics questioned whether electric vehicles could deliver the characteristics enthusiasts expected from a performance brand. Porsche's answer was ambitious. The Taycan wasn't designed to be merely electric. It was designed to feel like a Porsche. The performance was extraordinary. Acceleration was brutal. Handling received widespread praise. Its charging capability often led the segment. Reviewers repeatedly described it as one of the most convincing performance EVs on the market. This wasn't a compliance vehicle. It wasn't a half-hearted experiment. It wasn't a brand reluctantly adapting to regulation. It was a serious product built by a company known for engineering excellence, and for a while everything appeared to support the strategy. The Taycan attracted attention. Sales grew. The press praised it. Industry observers pointed to it as evidence that Porsche could navigate electrification better than most legacy manufacturers. On paper, the story looked almost perfect. Porsche had solved the difficult part. But that created a problem. Because if Porsche had solved the difficult part, why was Porsche suddenly under pressure? If the Taycan was so good, what was missing? At first, the answer seemed straightforward. Maybe the EV market was simply slowing. Maybe interest rates were affecting buyers. Maybe broader economic conditions were responsible. Those explanations mattered. But another detail made the story harder to explain. The Porsche badge itself remained remarkably powerful, and nowhere was that more obvious than the 911. The 911 wasn't outperforming the Taycan because it was newer. It wasn't outperforming the Taycan because it was more technologically advanced. In many ways, the opposite was true. The Taycan represented the future. The 911 represented a concept that had existed for decades, yet demand remained resilient. Customers continued waiting for allocations. Desirability remained strong. Enthusiast loyalty remained strong. The contradiction was difficult to ignore. Same company, same crest, same reputation. Different response. Why? That question became increasingly difficult to avoid. Because Porsche had spent decades convincing people it sold performance, and it did. Nobody could seriously dispute that. But if performance was the product, why did the 911 generate a different level of attachment? Why did one product appear insulated while another seemed increasingly exposed? The mystery wasn't getting smaller, it was getting larger. And then China entered the picture. For years, China represented one of the most important luxury markets in the world. Growth appeared limitless. Premium brands expanded aggressively, and Porsche benefited enormously. But China was changing. The luxury buyer was changing. The competitive landscape was changing. Consumers increasingly compared products through a different lens. Software quality, digital ecosystems, connectivity, technology integration. Feature sets, value relative to alternatives. In this environment, heritage still mattered, but it no longer dominated the conversation. Prestige now had to compete directly against innovation speed. The battlefield had changed, and China revealed something important, not because China caused Porsche's challenges, because it exposed them. China became one of the first places where Porsche's history had to compete directly against rapidly evolving alternatives, and suddenly another question emerged. If Porsche customers primarily valued performance and technology, shouldn't the Taycan have been perfectly positioned for this environment? After all, this was exactly the kind of product Porsche was supposed to excel at, yet pressure continued building. Pressure on assumptions, pressure on pricing power, pressure on future plans. And those future plans had been ambitious. Porsche had committed aggressively to electrification. The company discussed a future where electric vehicles would represent the overwhelming majority of sales. The headline figure was clear: 80% EV adoption. It reflected confidence in technology, confidence in consumer behavior, confidence in the future. But confidence depends on assumptions. And assumptions become visible when conditions change. As EV adoption slowed, timelines became less certain. Targets became conditional rather than inevitable. Battery investments suddenly looked riskier. Product transitions became more complicated. Execution became harder. Meanwhile, financial pressure was beginning to appear across multiple fronts. Revenue declined. Operating profit deteriorated. The stock traded well below the optimism surrounding Porsche's public offering. Cost reductions became necessary. Job cuts entered the discussion. Suddenly, this wasn't just an EV story, it was a business story. Something expensive had broken, not catastrophically, not permanently, but enough to force difficult questions. And none of those questions pointed toward a technological failure. The Taycan remained impressive. Its performance, its engineering, and its reviews all remained impressive, which raised an uncomfortable possibility. What if Porsche's challenge wasn't technological at all? What if the company had solved the engineering problem while confronting something far more difficult? As Porsche responded to changing conditions, leadership language began evolving. Executives increasingly spoke about becoming more desirable. At first glance, that sounds obvious. Every luxury company wants to be desirable, but the wording itself was revealing. Profitability, production, and market share can all be measured. Desire is different. Desire is what remains when competitors catch up. It is what survives when technology becomes easier to replicate. It is what allows certain products to command loyalty that appears irrational from a purely economic perspective. And Porsche's recent challenges may have forced the company to revisit that idea. By this point, a pattern was beginning to emerge. Not a complete answer, but a direction. The Taycan had successfully translated many of Porsche's strengths into an electric vehicle. Performance, engineering, luxury, quality, speed. The evidence for that was overwhelming. What proved more difficult was translating something else. The reason customers formed unusually strong attachments to certain Porsche products in the first place. For generations, Porsche ownership carried expectations beyond specifications. Not because customers sat around discussing philosophy, because behavior revealed it. People formed attachments to specific models, specific sounds, specific rituals, specific expectations. Many customers could identify a 911 before it entered a parking lot. They recognized it instantly. And while those characteristics are difficult to quantify, they influence purchasing decisions all the same. The evidence isn't that people hated the Taycan. The evidence suggests something more subtle. People respected it. Many admired it. Some loved it. But respect and attachment are not the same thing, and difficult markets expose those differences. When conditions become harder, consumers reveal what they truly value. And when pressure increased, the products that appeared strongest weren't necessarily the products with the most advanced technology. They were often the products that maintained the strongest connection to what customers already believed they were buying. Which leaves Porsche facing several possible futures. The first is adaptation. the company discovers ways to make electric ownership feel uniquely Porsche, not simply fast, not simply luxurious, but immediately recognizable. The second possibility is coexistence. Electric and combustion products remain side by side longer than expected. The transition becomes slower, more selective, and more flexible.